Hello and a very warm welcome to Bharata First. You're watching Big Picture with me, Rausan Pereira. First, let me inform you about Bharata First Knowledge Center, an initiative that will help each one of you and transform the way you learn. We had our first international relations class on Thursday and it has had a phenomenal response. All those who have been part of it have had a great time. You too can be a part of this journey. Go to our website kc.bharatafirst.com for more details and register before the second live class, which is coming up very soon. This is the last chance to avail the limited period early bird discounts as well. Bharata First Knowledge Center will change the way you learn. It's like something you've never experienced. Be a part of this wonderful journey right now. Now, since you're here, I would like to thank you for your continued support. For those of you who haven't already subscribed, please like the video, subscribe, hit the bell icon, and then all notifications. Do subscribe to our newsletter to get some incisive content as well. The Bharata First team runs a daily Big Picture quiz. Please participate by going through the description in Big Picture videos. Here are the UPI IDs for those of you who would like to come forward and contribute. A small contribution that you make will be a giant leap for us to keep bringing you this content. We are also considering ads and sponsorships. You can reach us at marketing@bharatafirst.com. All this information is in the description of the video. Please go through it. Now, time for our discussion. It's been 4 years since the goods and services tax system was implemented, a measure that reformed the tax system in the country. The GST regime has also helped boost tax compliance. The GST system, which subsumed 17 local levies like excise duty, service tax, and VAT, was rolled out on the 1st of July 2017. On June 21st, the Ministry of Finance said over 66 crore GST returns had been filed so far. Prime Minister Narendra Modi called GST a milestone in the economic landscape of India, as it had decreased the number of taxes, compliance burden, and overall tax weight on citizens. In this edition of Big Picture, we will analyze 4 years of GST, hits, misses, and way forward. Joining me on the program today are Ajay, former Secretary, Ministry of Commerce and Industry, Government of India; Ashok Bhattacharya, Editorial Director of the Business Standard; and Jayant Dasgupta, former Ambassador of India at the WTO. Thank you to all my guests for joining me on this edition of Big Picture. Mr. Bhattacharya, let me start the program with you first. Let's first analyze and understand how 4 years of GST have been. You've been covering it from day one and even much before that. So how has the journey been?
The journey has been rocky. This is actually a 30-year journey, in a sense that even before reforms began, the idea of GST to replace the modified VAT system in a few sectors had gained ground. The famous Amaresh Bagchi report first talked about the idea of goods and services tax. But there was no movement on that. There was no buy-in from the states. And it was only in around 2004 that you saw some movement on the GST front. And then another 13 years of hard negotiation where the UPA failed to get the buy-in of the states and the other political parties. In 2017, the party that had actually opposed the idea of GST implemented GST from July 2017. But the fact is that the manner in which GST was implemented, in my view, was patchy, clumsy, and had allowed a lot of imperfections to remain unaddressed. In spite of that, I would say that GST managed to roll out a new taxation structure, indirect taxation structure, that did away with so many taxes at the level of states and at the center, and made the life of an indirect taxpayer like an enterprise, any company, any trader, much more easy than what it was earlier. But there are still many issues In brief, what I would say is that the good thing is that today you have got an indirect tax structure which by and large covers the whole country with fewer registration requirements and fewer taxation problems. The bad thing is a large segment of the products are outside GST, and I'm referring to the petroleum products. They account for a revenue base which is almost one third of the indirect the GST tax base. In a sense that if the GST tax base is around 6 lakh crore, the petroleum product tax base is 2.5 lakh crore. So therefore, the petroleum products are outside GST, and a large so the set of benefits that should have accrued to a large number of businesses on account of petrol and diesel and aviation turbine fuel are not available to the system. So that's the bad part. And the ugly part is the manner in which the rationalization of rates have gone about. The rationalization of rates have been a unidirectional movement where, except one item in the last 4 years on mobile devices, every tax rate has been brought down. Whereas the idea was to rationalize the rates and make the slabs fewer instead of at least 7 slabs right now, and the revenue neutral rate coming down from 14% to around 11.5%, which meant the GST coverage was wide. There were more registered units paying GST, but the GST tax collection growth was not up to the mark. And final point, the big question mark on compensating the states for the first 5 years of GST had to be extended to the 6th year, and the future of that compensation cess, which is a steep cess item date over and above the 28% slab, is still to be resolved, and we still do not know when and how GST will be without that compensation cess that is being levied on almost every item which attract a duty of 28%. I think in brief, that is the story of GST in the last 4 years.
Thank you, Mr. Bhattacharya, for taking us through the story of the GST so beautifully and so eloquently. Mr. Dua, let me come to you now. Mr. Bhattacharya has brought out several of these issues very well, and how they stand and where they stand. And in a matter of 4 minutes, he has enlightened us so very well. Let's talk about some of these issues now. Teething problems were expected. We knew that there could be some issues along the way, but would you say that these issues have gone on for too long? Could we have done something differently?
Frank, actually, I wish to first thank Mr. Bhattacharya. He's covered almost everything which Jayant and I would have had to say on the subject, probably. He's made a very exhaustive summary and or presentation on the issue. That apart, if you recall, the final bill was passed by the Parliament, the GST, on the 27th of May 2017. That means the last week of May 2017. And hurriedly, because it was a maiden success after years of, I recall, at least not the 90s, at least from 2000 onwards, the efforts being made to bring in GST. So 17 years of hard work had gone in up. And so the government brought it in within 5 weeks of that legislation being passed on the 1st of July. At that very time, because I think the government wanted to cash in certainly, and make sure that there's no rolling back by anyone, reconsideration, etc. We had to make the word, I will borrow Mr. Bhattacharya's word, a very patchy start. Things had yet to be put in position firmly, and I'm referring not just merely to the rates, but also to the huge technological base which had to accompany the bringing in of GST. This so-called destination state consumption tax being levied collected at the point of consumption, but at every step in the value chain, the supply chain, the people were paying their credit and ultimately getting reimbursed when out of the final kitty when it's collected, except the consumer, everybody else was getting it back. The number of compliances which had to be made was also initially extremely high. I would have thought that either the government got surprised that it was able to develop, late Mr. Arun Jaitley, who had this, gift of getting everybody on board, including the opposition states, etc. It was a very major achievement on his part. But they, having brought in, I think, went along improving as they proceeded. But initially, and this applies even to the IT, the entire GST network, which evolved over time. Let me just say one other thing, then you could get Jayant on the subject. I think in one of that it was compromise, political, not perhaps the most optimum way, was when they left out at that point of time petroleum, what we call, natural gas, the alcohol for home consumption, not industrial consumption. Initially, even electricity had been left out. Power was not covered by it. All these were because the state said, what's left for us? If you brought in GST, 17 taxes, central and state, are being subsumed in it. What is there for our legislatures to decide? Our budget is what we are going to get from the center, but nothing really on us, on which our so-called sovereign state rights to exercise, impose taxes, etc., get left. So these are all right, you continue with these, etc. And I would have thought agreeing at that point of time to a 14% increase, annual increase in the values, meaning over 5 years, a 14% comes down to almost 90%. So, the increases which were due to the states, and the states, of course, looking at what had happened prior to that in value added tax, they demanded and got away with a constitutional guarantee as well. The going forward, a few things, but maybe we'll discuss a little later.
We'll come to that, yeah. We'll come to the way forward and what needs to be done a little ahead in the program. But before that, let me bring in Mr. Dasgupta into the picture as well. Mr. Dasgupta, this issue of oil and alcohol, can we ever see it being brought under the ambit of the GST? Because the states are already complaining about compensation, are complaining about revenue loss, and their highest revenue comes from oil and from liquor. So this problem, I think, will continue to exist. Your thoughts?
Petroleum products, of course, account for a large chunk of the revenue of states. But as far as alcoholic beverages are concerned, they are not really at number one position for the state. It is basically VAT, state VAT. And the major states like Maharashtra, Tamil Nadu, etc., they also collect a large amount by way of excise, state excise duty on alcoholic beverages. So I think, and the other point about alcoholic beverages is, as well as petroleum products, that they are not under state VAT. So the rates are quite different for different states, and they keep moving them up and down. For instance, during the COVID crisis, many states brought down their own state share and made a sacrifice. So that is something which I think will have to be addressed once there is this real spirit of cooperative federalism at play. Dr. Dua mentioned the late Minister Arun Jaitley's stewardship of the GST Council. All decisions, if I recall, during his time were taken by consensus. But in the recent past, the 43rd and 44th meetings, I think in May and June this year, there was a division. And obviously the states, of course, because they have been battered by this COVID crisis, the state VAT collections have gone down. Most of the liquor revenue has also gone down because liquor shops were closed. So the states have been clamoring to get their promised share of the GST revenue. And of course, there are two sides to the story, but the states do feel, most of the states, that they have not received their due share and that they are hamstrung because of this shortage of resources to fund their welfare schemes and other activities. So this is something which will have to be first addressed. Then about petroleum products and alcoholic beverages and stamp duty, I think that should follow when there is trust between the center and the states, all the states, and there is an atmosphere where there is a little bit of give and take, that no state will be left in the lurch, left high and dry, and made to suffer because it is giving up this very important resource. Now, the industries which are located in mostly Western India and Southern India, which are using various petroleum products as inputs, they are the ones who are going to suffer the most if this continues for long, because they would be not getting the benefits of GST. So, and as Mr. Bhattacharya has pointed out, it accounts for approximately 1/3 of the revenue which would have been collected if it had been within the GST net. So this is something which needs to be addressed. As far as state excise duty or alcoholic beverages tax is concerned, I think that is a second order issue. There should not be too much of a problem because most of the states, after giving up petroleum products, if there is a compromise, there is a negotiated settlement, they would come around and accept alcoholic beverages also. So that is something which is going to take place only after the due share of the states is passed on to the states. Once I think this crisis which the central government and the states are all facing together because of the COVID.
Absolutely. So, Mr. Bhattacharya, coming back to this particular point, because this is a contentious issue, and like Mr. Dasgupta has very correctly pointed out as well, we've seen a division really when the GST Council meets, and we've not seen the same kind of consensus like we saw when when Mr. Jaitley was there as the finance minister. Is there a trust deficit between the center and the states? Where does the onus lie to try and bridge that trust deficit, and how do we sort this out?
Well, there is a trust deficit. There is little doubt about it. The states are worried that their share in the revenue is not as large as it ought to be, and they are worried that once that 5-year period, and now it is a 6-year period, so after 2022, what will be the regime like? For example, if you remember, Mr. Jaitley had brought all the states on board by promising them a 14% growth every year. And if there is a shortfall, that shortfall would be met through the collections from the compensation cess levied on all items which are attracting a duty of 28%, which means automobiles, all other luxury items, etc. Now, the states are worried what will be the compensation cess mechanism, or will there be a compensation mechanism at all after 2022? That is actually central to the trust deficit that right now is bothering the states. The number two issue which is bothering the states with regard to the trust deficit is a slightly differential treatment when it comes to how the states should borrow to meet the COVID-led shortfall in revenues and how the center is treated itself. So and you will see that the way it was handled, I think initially there was a lot of resistance on the part of the center not to agree to an equitable treatment for the states as well as the center in terms of borrowing from RBI. Later on, under pressure, I think the center agreed to a more equitable treatment on that. So that is also what caused the trust deficit. And the most important factor for the trust deficit is that when the compensation is collected and the SGST share has to be distributed. Now there is, what will be the manner in which it will be distributed, what will be the timelines or the schedule for distributing it. So states are kept almost on tenterhooks, and at what point will they get the money? And finally, you have to see the structure of the GST Council. Now, the GST Council is a structure in which the center has a voting share of 33%, and the remaining 67% share is distributed equally among 28 states and 3 union territories, which means that around 2.16% voting share for each of the states and the center. Now, even though there are 19 states which are now by and large ruled by either the BJP or parties which are friendly towards BJP, you are seeing that the states, outside the GST Council meeting will complain about how a certain decision will be taken. And because the party high command wants a certain decision to be implemented, that decision is immediately implemented. Now, the GST Council is not supposed to go by a party diktat or a chief whip kind of a situation. So you need actually truly cooperative federalism, where each state and each union and territory, which have got a vote share of 2.16%, now they should be free to exercise that share, that vote, without any fear or favor to anybody. Now, all these factors have contributed to my mind, a trust deficit. Now, this can be addressed only if you have a GST Council meeting, which are held more regularly than they had been held in recent past. Because of the COVID situation, you haven't seen too many GST Council meetings been held in the last 1 year. Although the GST Act mandates that there should be at least, I think, if I'm not mistaken, one meeting of GST Council in 1 quarter. So all these factors have contributed to the trust deficit, which is not doing anything good to the future of GST or the resolution of the issues. I'll just take a minute more on the petrol and diesel and aviation turbine fuel, which are among the main petroleum products which are outside GST. There is, the GST Act clearly gives the full power to GST Council to decide at what point and how petrol and diesel and ATF will be brought under GST. So it is up to GST Council in a collective way to decide on that. Now, how can that petrol and diesel today, if you look at the duty element, the tax element in petrol prices and diesel, in a price of, let us say, 100 rupees of petrol or diesel, almost 60 rupees are taxes, which are collected by the center and the states. In other words, in the retail price, the share of taxes right now it is over 60%. So now, in a situation of, if you bring them under GST, you cannot say that under GST also they will be 60%, 30% CGST and 30% SGST. Now, if you do that, there is a problem of inverted duty structure. Every economic activity which is coming under GST will be able to take a set of benefit because of the high incidence of taxes on petrol and diesel, so therefore the revenue neutral rate, my fear is, will go down further lower than 11.5%, which is the current. So the only way, in my view, if petrol and diesel can come under GST is to have petrol and diesel taxed at 28% and add the cess element over on top of that, so that the cess is not to be set off. It is only the GST duty which is to be set off. So the inverted duty structure problem will be avoided, and the traders and the entrepreneurs will be able to take advantage of the petrol and diesel being under GST. So it's a complex procedure.
Absolutely.
In the last few GST Council meetings, these are held on online format, and I don't think too many discussions are not taking place the way they ought to be.
Absolutely. Absolutely. So, Mr. Dua, since we are here and considering the situation we are in, COVID-19, meetings not taking place, trust deficit, and all these other factors added to it, what kind of a GST regime is desirable? What can be worked out?
Frank, allow me to just continue this first on this discussion on petroleum products, how to be handling that.
Please
I'm
do.
totally one with Mr. Bhattacharya and Mr. Jayant Dasgupta that we must get it, and in most likelihood, it will be in the highest slab, 28%. The question is, how do you make up for between 28% and 55%, which is the average, varies countrywide, but it's roughly about half the amount will remain, other half. I am of the opinion that a basic cause of the trust between the center and the states on financial matters arises because the finance commissions repeatedly, 14 of them, have been only looking at issues incrementally, not in a holistic manner. We will increase the shareable portion from 30% or 31% to 41%, though it's not happened. We will do this little more transfer here and there. I am saying that the center, in order to show that it believes in federalism, it believes in the problems which are legitimately within the purview of the state governments, must agree. And then you will see the states falling in line that the surcharges and cesses which it levies on the taxes which go into the divisible pool with the states, those will be removed straight away. I am talking of basically on the personal income taxes and the corporate taxes, the surcharges, and these are not shareable with the states. Center keeps all of it. GST says keep it because it's going to the states. In any case, it's for their compensation. You remove that from there, the states share automatically of the revenues coming from the center would increase. It will then come to 41%, which has been recommended not by NK Singh's committee, but by the previous one or the commission, and we are not seeing any action on that. That's number one point. The moment you are getting states on board, today it might be 18 states of the BJP, tomorrow it could be another party, it could be coalitions and others. So we have to think long terms, not necessarily in terms of the just what is the situation and we are finding solutions only for the present set of things. Second, if you remove the taxes on petrol, both of the center and you are asking the states also to do it, states will do it when they see simultaneously their revenues increasing because the divisible shareable pool that has increased. After that, if still and that is where the guarantee will have to be given to the state governments, like we've given in the case of VAT and now in the case of GST, saying whatever they were making from petroleum products, all three, four of them, natural gas also, probably cooking gas has come out, I think natural gas is still there, that whatever is the loss which is being incurred by them, that will be made good by the center for a certain number of years in case the additional revenue which comes to them by way of the divisible pool being enlarged doesn't make up for it. And why is the then center can certainly hike up the rates, straightforward the rates of corporate taxes, individual taxes, rather than collecting it from the people and these are, as you know, only on the higher income and the better well-off companies. They can hike up the rates at the margin, collect more for themselves, collect more for the states. So do a thing straightforward manner, open manner. Yes, we are making COVID does require that the rich, super rich, and the wealthy must pay more. What's the problem in hiking up the capital gains tax at the margin? I'm not talking of wealth tax. If today the capital gains tax is 20% for a person for its flat rate up, bring in progressiveness there. The world over, the changes of this kind are taking place. In the United States, such a likelihood, a very strong likelihood that the not all the reversals of taxes of Mr. Trump will take place very shortly. He had brought down the tax rate from 28% to 21%, basically to benefit the richer people. There is a talk saying that, all right, wealth tax is maybe too unfair on people because just because you have wealth more, how will you pay the taxes unless your sales takes place, there is proceeds. So I'm not talking of wealth tax, I'm talking of capital gains taxes being hiked up.
Correct.
when there is an income accruing to you or your through sale of assets, real estate, stocks, etc. So the states confidence has to be won, and it is not by merely today X person is a finance minister, that tomorrow there could be another, but the structure, that is what the finance commissions were supposed to do. They have to be able to create a constitutional structure. It's a constitutional body, legal body, and then see to initiate itself. And I'll stop it at this. This is my wild thought, which I was sharing with all the distinguished panelists and you, Frank, is that you will see the GST Council will say, yes, we agree to we agree to an amendment, we agree to a constitutional amendment if it's necessary, if the states want an assurance on a constitutional amendment that if they remove their taxes on petroleum, etc., the center will cover them up for a certain amount of period. If it requires, states will come. Otherwise, with now GST Council, the center can get its way. Mr. Bhattacharya has explained so well there that center plus 18 states cross the threshold limit of 75%, with which the resolutions or the matters can be resolved there. If they want it, the GST Council can vote saying, can resolve that let's get petroleum and petroleum products into the scheme of things.
Absolutely. So Dasgupta, let's also talk about what has worked really over the last 4 years as far as the GST is concerned.
The first thing which I think has been sorted out is the large number of glitches which were there in the GST net, in the IT infrastructure, and in the compliance burden, especially for the small scale and to a certain extent the medium scale industries, because the larger corporate group companies, they were not really affected very much because they were already computerized. So that is one thing. The second thing which has been, of course, because of this, the glitches in the IT infrastructure, in the first year, it has been estimated that there were very large scale tax evasions and unfair and illegal claims on duty refunds. In the second year, these were discovered when the infrastructure was slowly put in place. And then the enforcement machinery went hammer and tongs at these people. And so there was a great deal of hardship even to genuine people. But after the second year, this has, I think, calmed down. And now the refund mechanism is also in place. It is working, not of course in an ideal manner, but it is working quite well. So that is the second part. The third part is about the automatic populating of the returns. in many cases, I think GSTN 3B, 2B, etc. So that helps in reducing the compliance burden and in claiming input tax credit, for instance. The other point is that small scale industries have been, to a large extent, they have been exempted from various filings. I think for one, it is, I think, about 5 crores that they don't really have to file returns as regularly as for the other companies. Then the e-way bill problem has been sorted out to a great extent. So these are some of the positives which have come about, and I'm sure that uh, this rationalization, because if you look at the disputes which have been taking place, it is about the classification of various goods and services in that 12% and 18% category. So if they could be merged and could be possibly 11 and a half, or could be 15 or 14 or whatever, that would solve a lot of problems and heartburning amongst the industry people. So rationalization, 28%, and middle one at around 12 to 14,
Well,
and the one which is at 5. That is how it should be going. We should be going about it. So these are some of the very positive things. And one last point which I wanted to mention is that the finance ministry has come out with the figures that about 189 people have who were involved in tax collection and implementing various reforms have lost their lives because of COVID. So the finance minister has acknowledged their immense contribution of the whole machinery, but in particular these 189 people who have sacrificed their lives, because everybody had to attend office no matter what was the situation of COVID. So I think we are in the right direction, but I would like to end by saying trust has to be built up, and we have to devise a structure which does not depend on the present day configuration of sharing of power amongst the states and at the center. It has to be irrespective of that. It has to be as equitable as possible. And there would always be conflicts, because the states would always be asking for more, because they want to have their own welfare schemes implemented, they want more money. So that conflict will be there, but it has to be equitable, it has to be transparent, and the states have to be given a voice.
Right.
That is the last point that I wanted to mention. Thank you.
Absolutely. All right. Let's get quick closing comments now from all the panelists with the best way forward, starting first with you, Mr. Bhattacharya.
Well, I think the best way forward would be to make it work in a way that, from a technology point of view. Now, Mr. Dasgupta referred about the e-way bills, and I would take this thing forward. What has happened in the last 9 months or so is that the e-invoicing system has been introducing, which is now covering every transaction more than 50,000 rupees, which means that virtually every transaction in the country under GST is now covered under e-invoicing, now which helps populate the various returns. So it is a great way of making sure that the GST payment system is smooth, and the GST tax coverage has no leakages. Now, as a result of which, the e-invoicing system has coincided with a situation where the GST collections for 8 consecutive months have stayed above the 1 lakh crore mark. And if you look at the March, April, May figures, you will be surprised that even if you compare it with the 2019 numbers, you will see that there is a growth in the GST collections. So I think that compliance is a very important issue, and we must focus more on compliance. We must focus more on rate rationalization, and we must find a way out by which we can include petrol, diesel, and ATF under the GST net.
Absolutely. Mr. Dua.
I would emphasize I'm working out almost an automatic mechanism to compensate the states. We've seen how much of bitterness arose last year when the center said, the matter almost landed up in the court when the center said it is, because of COVID, we cannot pay you, compensate, etc. And and then the states, the ranks within the states broke on political lines, and people saying what the offer which is being made to us by the center of saying you can borrow, etc. That makes sense. I would say the way forward is linking it up with what is due to a state being certified by the center and the Reserve Bank of India automatically crediting the accounts of the of the state governments to that extent and debiting the states. They're debiting the center to that extent. That is a way which will, one, give them confidence, give them greater ability to plan their own expenditures and priorities. Without why should the center and the states on such matters be quarreling with one another and looking to the courts to settle that matter? That's number one. Second, I would like to see, now that 4 years are over, fifth year we are into it, the rates brought down to just 3. And as Jayant mentioned, luxury items they can be semi-luxury, 28% and above, 14%, and the 5%, if you like, you can bring it to 6%. And it might increase the average, but it is no longer 7, as he mentioned, or 5 slabs otherwise, which they are. Those are not there. And third, exclusions be done away with. I would like to see all exclusions because it is upsetting this entire system of input credits. And if you don't get a credit for petrol, and petrol for certain items, as you mentioned, or hydrocarbons, can be a very significant amount of your input or raw material or intermediate costs. So these 3 things to be addressed in the next phase at the earliest is what I would like to see.
Absolutely. And Mr. Dasgupta, close the show for us with your quick concluding remarks.
Just 2 points I wanted to mention. The first is much greater use of technology to have automatic populating of the returns and automatic credit going to the industry who are using intermediate products, consumables, etc. So that is something, and the proof of the pudding will lie in asking the small scale people whether they are getting the credit on time or not. There are delays, etc. And of course there is a system which has been put in place about giving interest, but this needs to be strengthened so much that things move smoothly without any, if I may put it, human interface. Because we had the ghastly experience of people asking for hard copies of sack loads of documents to give input credit refunds. So that is something which needs to be done. The second point is about building up trust with the states, because we can't run on just one wheel. Both the wheels have to pull, and then only can the cart move. So building up trust with the states and then bringing in petroleum into the fold of GST is of the essence for taking this whole thing forward.
Absolutely. All right, gentlemen, we'll have to leave it at that. Thank you so much for joining me on the program and putting things into perspective for us. Well, what's coming out of this discussion is that the GST is indeed a very needed reform. However, it hasn't performed like it should have. The initial teething problems have been taken care of, but the bigger issues that have emerged have remained with no solution in sight. There is a trust deficit between opposition-ruled states and the center. Trust has to be built up through consensus. Compensation is another really big issue. It has to be addressed in a formal and comprehensive way with a concrete solution. Rate rationalization should also take place. Currently, we have far too many rate slabs. We should ideally have 3 and consolidate it at 6%, 14%, and maybe 28%. For now, fuel doesn't look like it will be brought under the GST. That will continue to be a bone of contention between the center and the states. Well, before I go, let me once again inform you about Bharata Personal Knowledge Center. an initiative that will help each one of you and transform the way you learn. We had our first international relations class on Thursday, and it has had a phenomenal response. All those who have been a part of it have had a great time. You too can be a part of this journey. Go to our website kc.bharatafirst.com for more details and register before the second live class, which is fast approaching. This is the last chance to avail the limited period early bird discount. Bharata First Knowledge Center will change the way you learn. It's like something you've never experienced. Be a part of this incredible journey today. Well, since you're here, I would like to thank you for your continued support. For those of you who haven't already subscribed, please like the video, subscribe, hit the bell icon, and then all notifications. Do subscribe to our newsletter as well to get some incisive content. The Bharata First team runs a daily Big Picture quiz. Please participate by going through the description in Big Picture videos. Here are the UPI IDs for those of you who would like to come forward and contribute. A small contribution that you make will be a giant leap for us to keep bringing you this content. We are also considering ads and sponsorships. You can reach us at marketing@bharatafirst.com. All this information, along with some must-see recommendations, are in the description of the video. Please go through it. That's it from me. See you again next time.